Hi everyone, my name is Devashish, and in this video we'll be dealing or we'll be understanding what is financial feasibility. Now, in the previous videos we have figured out what are the steps for market feasibility, right? So once we are done with market feasibility, when we have a positive demand for the product that we are building, the second thing is to actually see if we are meeting our objectives in terms of finances. Even if it's a non-profit, a non-profit generates social wealth. So end of the day, wealth creation always happens no matter which type of business that you start. Therefore, you will have to do a financial analysis. Now, if you were in a business school, financial feasibility is something where students spend at least 2 to 3 credits. So it's fairly difficult to explain what financial feasibility or creating financial statements are like in one video. So I will probably take a lot of videos to do that, and I will do it in the times to come. But in this video, I want to summarize the entire process. So it all begins with number one, calculating your startup costs. So what you do is you go ahead on an Excel sheet, you open an Excel sheet and where you jot down all the costs of starting the project. Even if you're developing a product, whatever money that you require to set up the entire manufacturing or service base for that product, that becomes your startup costs. Now what you do next is, once you have figured out your startup cost, you go ahead with your operating cost in particular, right? So say everything is developed, all your products, everything is developed, you're ready to hit the market. You would now require the money to pay the salaries, you would require money to pay rents, you would require money to pay for the utilities, a lot of it, right? So you will have to jot down all your operating expenses. So that's the second step. The third step is to actually jot down all your revenues. So we have revenue streams, right? In fact, one idea can have multiple revenue streams. It could be through advertising, it could be through selling of the product, it could be through commissions, all of it. Jot down all your revenue streams, and at the same time jot down the value that you will be generating from, or the revenue value for each stream, right? So now you have figured out what are your startup costs, what are your operating costs, and what are your revenues. So what you do is you figure out your operating costs and revenues for 5 years, right? You make assumptions in this process, but you calculate it for 5 years. Now every year's profit before tax is essentially revenue minus your costs, right? That's your profit before tax. Now that profit needs to be adjusted with first your taxes, not the first thing. First it needs to be adjusted with your depreciation, right? So there are elements in a startup cost that can be depreciated depending on the income tax rules of various countries. You actually get to depreciate the startup cost. The idea is fairly simple. Look, so if you have invested into a truck right at the beginning with an assumption that this truck will be functional for the next 3 years, and then after 3 years this truck will probably be of no use, it will have a scrap value then. So essentially you have made an expense which was supposed to be done for, in these 3 years right at the beginning. So you should get an income tax benefit, right? So you will have to adjust your profit before tax with the depreciation. You will have to adjust it. With the earnings that you will be giving away to shareholders. You will have to adjust it with the taxes after that. And after having done this, you will get the profit after tax, right? Now this profit after tax is your profits, pure profits, right? So what you do is you actually use that very Excel sheet, and every year's profit, not every year, let's say the first year's profit becomes the opening balance for the second year, and in the second year the opening balance of the first year plus the profit after tax of the second year becomes your closing balance of the second year, and that closing balance becomes the opening balance of the third year. You understand what I'm doing, right? So you do this for the 5 years, and now you have a or 5 years, 25 years, whatever is the scope of the financial statement. You do it, and then you have a cash flow, right? Now this is not analysis, this is you making the financial statement, right? Here is where the analysis starts. So analysis is actually defined by the scope of what you're trying to answer. So if you are trying to figure out by when will I be able to hit a break even, so you will do a break even analysis. Now in a break even analysis can happen in two ways. What are the number of units that I need to sell in order to reach a break even, or what are the number of hours or any unit of time that I need to operate in order to reach my break even, right? So you see that once you define the scope of what you want to figure out through finances, you conduct a analysis in sync with the scope. For example, say if you want to figure out what would be my return on investment, so you can figure out the ROI through using the formulas. Now look, I'll tell you, there are so many things that you can do in a financial statement, especially with ratio analysis, that it's fairly difficult to sum it up in a 5 to 6 minute video. A very genuine suggestion would be go on Google, search for ratio analysis. You will find web pages that will not only tell you formulas but also tell you the interpretation of the ratio analysis that you're doing. So there are, if I don't have a count, but at least 15 types of ratio analysis, right? So it all depends on the scope of what you want to do, and I will take it up one by one in the videos to come. But in this video, let us wrap it up here. And the idea of financial feasibility is to actually give you a clear idea as to whether your product or your startup idea is meeting your goals, for your financial goals. So that's all about financial feasibility. If you like the content, please like and share it with your friends. Subscribe to this channel, and in case you require a one-to-one consultation on how to go ahead with your product or the startup idea, please feel free to reach out to us using the link below. I look forward to your comments and the questions over comments. See you guys. Have a good day.